Good morning, traders, and welcome to the morning update. It's the 30th of August, and this is Mark Owen speaking. I hope you all had a great bank holiday, plenty of relaxing, family time, or partying with friends, whatever it is you like to do in your downtime. However, the week has now started again. We're coming to the end of the month, and we've had another big shift in market sentiment. And what you'll probably find when it comes to the currency market right now, everything is to do with the US dollar. Whether we get a big move for bulls or bears, it's pretty much we've got dollar strength or dollar weakness. And we're going to come to a slide in a second after the news announcements, and you'll just see the clear illustrations on the dollar index where I've marked on the last FOMC. Then we've got Jackson Hole, and then obviously we've got this Friday's non-farm payroll. Well, let's have a look at the news that's come out at 2:30 this morning, which was building approvals month on month. Initially, you look at that and you'd probably say it's good, seeing that the forecast was 0.0 and it came in at 11.3. When you look at the actual dwellings that have been approved within the private sector, not many of them are houses. Actually, there was a decline in housing. So what type of housing is it that's been put up? Doesn't really give you a clear indication of the approvals, and that's been seen in the Australian dollar. There was no real significant rally. If in fact the market's actually declined, we'll look at that in a moment. Okay, so after the speech on Friday, we had a relatively, well, for Janet Yellen anyway, we had a relatively hawkish statement from her, talking about the state of the US economy. So literally everything is data dependent from the US now. If we keep getting decent data like we did last week, good NFP numbers this week, there'll be 3 NFPs in a row. Will that lead to September rate hike? Well, as a trader, I really hope so. Why? Because that'll just give us continued direction for a period of time. Maybe take us out of this little bit of chop that we've seen. August, in all honesty, for myself, has been a pretty average month. In fact, I'm actually down. I've got some open positions that are running okay at the minute, but obviously they're open, they're not closed, and they're not banked. What do we put it down to? There's been a lack of continuity in the market, lack of liquidity. There's also been error on my behalf. I'm going to be open and honest in front of everyone. I have missed some of the trades that I sent out to all our clients at the beginning of the week in our analysis. No excuse for that. Yes, we are a new business and very busy, but at the same point, you know, when you're trading, you have to be on top of the game 100% of the time. So my rule to myself for September is no excuses, no trades missed. If you call it, you trade it. So September should be a fantastic month. We're looking to get back on the profitable foot like we have been most of the year. However, we've got to accept that there's going to be times where we're going to take a hit every now and then. But we do have some good trades running. Okay, so we've got consumer confidence later on today, 3 p.m. We're looking for it to come in at 97.2. Anything better than 97.2, we should see follow through on dollar strength. Okay, so we're going to start with the Nikkei. As you can see, last night's candle currently through here is bullish. We can see that the market after Friday's, or I should say Monday's candle here, and Friday's Yellen speech, we can see that it had a significant reaction off the short-term trend line. Monday continued, although bank holiday here in the UK, and then Tuesday we can see we're still getting this little follow-through, a break of this high here, and we should see it come up test resistance through here, which is around the 17,000 big number. So expect to see the Nikkei touch 17,000, and then we'll be looking for a breakthrough of that level. A breakthrough of that level will indicate further weakening, I would have thought, on dollar yen. So or further weakening on yen and a movement up on dollar yen, which we'll look at in a second. So the dollar index, this is what I was talking about. So the FOMC made their statement over here, and look at the reaction. We've got this nice ABCD pattern straight down to the bottom, touching our lower trend line, and then it sat around on structure for quite a while, probably anticipating what was going to happen at Jackson Hole, what was Yellen going to say, and well, we can see the market shifted downwards and then boom, straight up into our open area now. So if we look at the dollar index, we're pretty much clear now until around 96.5, which is through this area here. That's our next area of structure, and then we break through that and we've got fresh air again up to 98. So potentially we've got a real good move here on the dollar index, which if we do get that, remember the dollar index is most heavily weighted towards the euro, then to the yen, then to sterling. So predominantly look at trading those markets when lining up the dollar index. The Swiss franc or dollar Swiss does correlate beautifully with the dollar index, so that is another one. Although it's not very weighted to it, the actual chart is pretty much a mirror image. Okay, now this is dollar yen. This is running very, very nice. You can see where our entry was right down here. Nothing's banked. The only thing we've done is move our stop to break even. We will expect to see maybe a little bit of resistance at 102.70, and then we expect to see some chop at this trend line. If we can break through both of these, then we've got sort of a free run up to 106s. That will be a next point to potentially see some stalling, and then we'll look up to about 1011s. So the 102.70 is an area I'm going to look at to potentially add in. I'm not going to look at shorting this market. I'm looking to build a position. I'm hoping, and on the side that the Bank of Japan are going to step in with some kind of improved stimulus package on their next speech. Obviously, their economy is in pretty much dire straits. Machinery orders are very low, and the last thing they need is a strong yen, which will obviously impact exports. So I'm looking to hold this position. We've got a current target in at 111. Now you probably think that's a bit ludicrous, but depending what's said and what happens over the course of the next week or two, this target of 111 might actually be moved up to around 124. So this is a position I'm looking to hold. Now remember, the one thing that if you are going to hold positions, you want to know if you're going to get charged for holding these positions overnight. When it comes to selling the yen, because it is a negative interest rate, look at your brokers. You should actually be receiving swap. So when you sell yen, you should actually be receiving some income. So on a daily basis, I receive income for holding this trade long, and on a Wednesday I receive double is a triple rollover on a Wednesday, and that's the same with every broker. If you're not receiving it, mail in to me, let me know which broker it is, because what I like to do is I like to have a look and compare brokers, and I give a lot of feedback to students and to friends on brokers. So guys, have a look at your broker, see what they charge you to hold a position overnight with dollar yen. Are you receiving income or are you getting charged? It'd be good to know. Okay, next chart we're going to look at is Aussie dollar. Well, we told you about the news on Aussie dollar last night. Now you can see that this is operating within a symmetrical triangle. Now we are still on the side of dollar strength, that is US dollar strength. So we've broken, there's a very, very short-term trend line through here. I've not put it on because I don't want you to think I'm just drawing trend lines all over the place. But it's more of a shorter time frame. Well, we've come through that, and I'd envisage now that this market is going to test this lower trend line. So intraday traders, have a look at taking this market. If you are trading intraday and you want to try and hold a position, make sure you're banking 70 to 80% of your position before close of play, and then leave 20% to run. This way you're not going to, your rollover charges will be significant when you're selling Aussie dollar or Kiwi, because these are the ones with the high interest rates. But also you're not going to have money back to the market. So make sure if you're intraday trading, you get most of your money off, if not all of it, before close of day. Okay, Euro Yen, this is a position we just took early hours of today. Now this was a pure technical trade on the premise that yen is going to weaken. So we've gone long euro yen. You can see it very, very clearly. Nice significant level here. We've got a beautiful breakout of this level, and it's come back to test it. We see it in decision. We've just bought above the high of the candle. I've got a significant target on this, but that will amend as time goes on. I want to see how this trade plays out. As soon as we create new highs, I'll be moving my stop to break even. Other than that, we'll be let's see what happens with this trade. And a couple of commodities now. So the first one we're going to look at is palladium. This one's been on our watch list now for some weeks. We were in it from this candle over here. We did bank first targets only for a news announcement. Mr. Stevens, on his final speech of being in charge of the Australian governor, he basically sent the markets into turmoil for just a good few hours. We got spiked out, and then we haven't yet found a way back into this market. So what we're looking at is this long-term sort of trend line here that's been respected multiple times, once, twice, 3, 4, 5, 6, 7 times, and then we've got this sort of head and shoulders pattern in here. So we're looking for a clear break and close below, and we'll use this area of structure to take it short. Should that happen, if it doesn't happen, then we've got no trade. Final chart we're looking at is sugar. We've taken this a couple of times now, so we've been in this a long time. Once from this position here, and then last week we actually traded from this point here. It was a weekly R2 pivot. We got in. Stops are above the highs. You can see this market is coming into the apex, so we would expect it to potentially break out either to the upside or to the downside. At this point we have a commitment to traders signal, and seasonality is bearish through to sort of October time, November. So this will be one that I'll be looking at, and I'd like to see a break to the downside, and we'll look to hold it for a couple of months. But again, our stops are in a technical place, and if we get stopped out, then our risk management is in place. So no damage done, just the loss on the trade. And remember, the one thing that you can control, guys, is how much money you lose in the market. You'll never be able to control the outcome, i.e. where the market is going to go to, but you can always control how much money you are going to lose on a trade. That's the most important thing. Always remember that if you are upset when you get stopped out, it probably means you've risked too much. Okay, finally, people in Norway, England, if you want to trade with Phoenix Blue or come and meet the team, we'd love to meet you as well. This is for new traders, primarily in Norway. So in Norway, people that have never traded or are still at a novice stage, we'd like to see you September the 27th. If this is something that you'd be interested in, learning the Phoenix Blue way, then register for our event. You can do that either by emailing info@phoenixblue.co.uk or go to our events tab on our website and register there. Also in England, on the 21st of September in London, we'll be having another learn what it takes to trade like a fund manager. Now, if this is something that you'd like to attend, again, same process. Email info@phoenixblue, registering your interest in gaining a seat, and we look forward to seeing you all there. So, guys, have a great day. Trade with discipline, and we will speak to you tomorrow morning. Bye bye.